In trading, if you can't find the liquidity, you are the liquidity. Let me show you how to find the liquidity so you're never the liquidity. So liquidity, there's key things we need to establish first. Our main push, which is a new territory found, which would be this, or that. Go on my previous video if you want to find out more about that. Point of interest, which is essentially what led to the break. This is an extreme that led to the break. This is a decisional that led to the break, and it has an extreme as well. Now, liquidity, we have different types. We have trendline liquidity, build up, daily highs or daily lows, session highs or session lows. Then we have support and resistance, and then we have the max liquidity, which we call the whole point of interest being sucked out. Now, confirmation is essentially when you have liquidity above or below your point of interest, right? So the confirmation is we take out that liquidity and we tap into these points here, your extreme or decisional. You also have an efficiency to the pullback, but you can go on my previous video and find out more about that. But now let me show you how you can apply all of this on the charts. But before I do that, follow me so you don't become liquidity. So on the M15, we found our main push, this low that led to this high being broken, right? After establishing that, we need to find our point of interest. This is a decisional that led to that break right there. This is the extreme of that. Okay, cool. Now let's go on the M5. So on the M5, what do we have? So we've established our main push and we've established our point of interest, right? This point here is not, even though it came down, it broke structure here and we came down and led to a new structural break. This is a trap. Why? Because it hasn't tapped into our decisional or extreme yet. So this becomes liquidity. What type of liquidity is this? We have trend line and we have this point here was a trap. It led to a new high, but it's a trap. What does that look? So we have trend line here and we have this one here, the max liquidity. Look at that. This point led to a new high. This point here led to a new high, right? So now let's see what happens. Price comes, takes out the traps, right? The liquidity. Cool. But remember, it still hasn't tapped into the decisional yet. What happens? We tap it now. Now let's go on the M1. So on the M1 now, what do we see? We tapped into the decisional. What was the down candle that led to us tapping into that? It was this one here, right? Look what happens. See how we're not breaking that demand. And what do? We go and break the high, this high here. See how we've broken it? So now look, from external, we have to come and take internal liquidity. Because remember, we just broken structure. We have a point of interest. What's the point of interest? Ooh, where's the thing? This is our point of interest. Right, so now let's see what happens. Taps it and goes. What did we take out? Liquidity. Liquidity here. Liquidity. This is the build up I'm talking about. Build up liquidity. You see, look, point of interest, liquidity, sucked out. And then what happens? We need to make a new high because market structure is bullish. What do? We keep going. And we reach this point here. That we're looking for price to go and break this point here. But look, this is today's price action. This is not previous price action that I came and discovered. This is today's price action. Liquidity runs the show. Hence why I scream, if you can't find the liquidity, you are the liquidity. Because if you come to your point of interest and there's no liquidity for us to take, you are the liquidity. That point of interest is going to fail and your stop loss is going to be taken.